if someone asks me, where is silver in 5 years from now, 10 years from now, I have no other option than to be bullish. And I say that simply not because of the industrial side, but simply because of what's going on with fiat currencies, right? So we're likely headed up to, max 90 to 90, 92 to 91. Once we get there, that's your big attempt, right? That's going to be the determining factor. Do we break this and go to all-time highs, or do we get rejected and come back down?
What I feel, my opinion doesn't matter. This is what the chart says. If we get above 89.90, we could skate to 94, and then above 94, there might not be anything in the way of us going higher. I wouldn't call, I want, those of you who are familiar, I want to call this a measured move. It's not, because you have all this here above you.
The silver market is currently facing a structural emergency as of late February 2026. Official COMEX data shows that registered silver inventories have plummeted below the critical 90 million ounce mark, a historic low that has widened the paper-to-physical imbalance to over 400%. With the March delivery cycle looming and Shanghai silver trading at a staggering $10 premium over Western spot prices, the paper pricing system is under immense pressure. As large institutional players bypass traditional exchanges to secure physical metal, we are witnessing a global decoupling that could trigger a violent repricing event at any moment. In this video, Gareth Soloway, Chief Market Strategist at Verified Investing, is joined by Vince Lanci to break down the line in the sand levels for 2026. Soloway uses his signature no BS technical analysis to identify a formidable resistance ceiling between $91 and $92, warning that while the long-term case for silver is undeniable due to fiat debasement, the short-term chart is flashing a bear flag risk. They discuss the psychological primer that could propel silver toward triple digits and why the current volatility is shaking out weak hands before the next major leg up. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We see here is you can see this little base point, right, where we kind of chopped up and down before we got into this final surge on silver. And what that tells us is, notice how when we fell, we came right into that level there. Okay, so you can see very clearly this is technical support. You can see we kind of hit it here initially when we collapsed on silver back in early February. We had a big bounce. We then had a secondary attempt to break this level, which pierced. You can see the tail on this candle right here, right? And it got down, and then we bounced back up again. Then we kind of kissed it, and this is where we're making that next move to the upside. So the question is, number one, where is our support? And we've just answered that, $70 to $71. Let's write it in, all right? Major support. $71 to $70 per ounce. All right, so we've just established our obvious near-term technical support. Now let's look at resistance. Now resistance is very similar in that you can see right here, there's this little bit of a kind of initial move up and then chop, 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 attempt again, chop, 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 and then we got into that bigger move. And so what that tells us is this then becomes our technical resistance zone. Okay, so again, what we'll do is we'll look at that and we'll put in the levels. So this is $91 to $92 resistance. We do resistance $92 to $91 per ounce. All right, so do you see what we've just done? And this is always, and by the way, I could have these on the chart ahead of time, but I think there's a value in the education that I'm trying to convey in showing how I'm finding these levels, right? Because this is something you can replicate on any chart. It could be a stock, it could be something like Nvidia or Apple, or it could be a crypto like Bitcoin or ETH. It's doable on anything. It could do it on oil. It could do it on natural gas. You have to be able to see the levels based on the price action. All right. And I'm not using complex indicators, right? It's very simple to do this. It does take an eye that is trained over time, but you got to start. If we get up into this level right here on silver, this 90 to 91, 92 to 91 level, that is going to be technical resistance. Now, one other thing I want to show you here, because again, you could see what was going on, and I want to just show this. What we can do is we can create a little bit of a wedge pattern inside of this, and this is kind of a new little thing, but look at this. So what this tells us here is silver was trading in a near term. So again, and just, I don't want to overcomplicate things too much, but you have moves within moves, right? And so there's something called a micro move or a micro pattern, which is a very short-term pattern that can play out over a couple days. Then you have the midterm, the middle pattern, which is over the next couple of weeks. And then you have the longer-term pattern, which is months out. Okay, so what we're looking at here, and what I just put in, is you can very clearly see how we have lows to lows, highs here, touching here, and then here. And notice how when we broke out here, this was the kicker that said, okay, silver in the near term, the micro pattern, is likely going to go and retest this level up here. But the thing is, just because it breaks above this wedge, it doesn't mean it's the next big move to all-time highs, because you still have to get through this massive brick wall on silver. Okay, so again, the breakout here occurred on Friday. It's continuing on Monday, but it's a near-term micro breakout that tells us we're likely going back up. And remember, everything I do is all in probabilities. There's no certainties. I wish, trust me, I'd be literally equal to Elon Musk in terms of wealth if it was certainties and I could do this in terms of certainties, right? It just doesn't work that way. It's probability. So I can be a casino where I make money consistently over time versus the gambler that will lose money over time by gambling. At least I can put odds in my favor like a casino does and make money over time. But just like a casino, there'll be a trade that comes and takes my money from me, right? Just the nature of the beast. Just like someone can go into a casino and win. I mean, many of us have had that situation where we actually walk out with more money than we came in with. It's just over time what happens. Over time, if you gamble enough, the casino generally wins. All right. Okay, so what we know is we've broken a near-term move here. Now, one of the things that we're going to keep an eye on is this bottom line, because let's say we go up to this level and on silver, we extend this out. And let's say silver eventually, let's say, comes up, we hit this level, get rejected, we come down and we break. Once we break here, then silver is likely going to go down to this level. And so you can have these micro in-between levels. Now, again, this is just a micro pattern, little wedge pattern here, and I'm going to remove it for the time being. We just discussed the micro, right? So we're likely headed up to, max 90 to 90, 92 to 91. Once we get there, that's your big attempt, right? That's going to be the determining factor. Do we break this and go to all-time highs, or do we get rejected and come back down? Now, as long as we stay between this line and this line, so resistance and technical support, what kind of pattern is this forming? Well, let's draw it in. If we stay like this, what type of pattern is this, guys? And essentially that's what we've got here, right? Ups, downs, maybe ups, downs like this, right? It's a bear flag. And that tells me my midterm pattern, and don't get confused, it's just crossing over this, but my midterm pattern is to the downside. Okay, so even though you'll see a lot of comments and a lot of chatter on social media, and this is where you have to train your mind to be stronger than emotion, you basically are at a point where you're actually forming a bigger bearish pattern. If someone asks me, where is silver in 5 years from now, 10 years from now, I have no other option than to be bullish. And I say that simply not because of the industrial side, but simply because of what's going on with fiat currencies, right? And while de-dollarization is a very slow process over 10 or 20 years, it is happening. And if you're in US dollars, you have to assume silver will over the longer term go up. Look at the US debt, look at the tariffs and what's going on with the fiasco there. Now, are they going to get refunded? But now President Trump has blanketed 15% tariffs across everyone. It is just, there's so much uncertainty and it's just going to add more stress to the system, etc. So longer term bullish, short term, really honestly, short term, micro term, a little bit bullish here, but more in a range bound, and then midterm is still bearish.
Technical analysis of the current silver market reveals a well-defined battlefield between established support and resistance zones. Near-term technical support has solidified in the $70 to $71 range, a level that has successfully repelled multiple collapses throughout early February. Conversely, silver faces a massive brick wall of resistance between $91 and $92. While we are witnessing a micro breakout from a near-term wedge pattern, suggesting a move toward that upper resistance, the broader midterm structure remains a bear flag. This sideways chop often precedes a downward resolution unless bulls can decisively clear the $92 ceiling. Despite these short-term hurdles, the long-term outlook remains overwhelmingly bullish. The relentless expansion of U.S. debt, the implementation of blanket 15% tariffs, and the gradual process of global de-dollarization are creating systemic stress that favors hard assets. In this environment, silver is expected to eventually reprice significantly higher as fiat currencies lose purchasing power. However, for now, the market is a game of probabilities, requiring investors to differentiate between short-term noise and the structural shift toward all-time highs. Let's get back to the interview.
Here's the main story. The United States is exploring price floor mechanisms for critical minerals, such as silver, to support domestic industry and reduce reliance on foreign supply chains. By encouraging sustained higher prices, policymakers will stimulate, we should say, investment in refining and manufacturing capacity at home, while exporting cost pressures to overseas competitors whose industries depend on lower input prices. That story was very popular over the weekend. Next, Citi says Trump SCOTUS counter tariffs, bullish inflation gold. Basically, the Supreme Court shot down Trump's tariffs as being unconstitutional, and in doing so, inspired Trump to just implement the 15% global tariff, which he can do under different rules and that is not Supreme Court oriented. This is bullish for gold, and that is why the market rallied on Friday. All right. Your attention to the next two posts there. Goldman central banks raise floor on the gold price, but Americans raise the roof. And CFTC American funds want the gold on dips. We found two posts. We wrote two posts over the weekend that covered this. One was Goldman had noted that Americans are, in fact, buying gold hand over fist. And if they're not buying the the ETF, they're buying calls themselves. So there is a lot of call buying on the ETF side, and there is a lot of physical buying on the central bank side. So together, we're seeing gold, again, up almost $40 right now. Hartnett says trade oil, own gold. Uranium, too much demand, not enough supply. Uranium, too much demand, not enough supply. That's a case to just own uranium, because as a component of the cost of nuclear power, it's really not a big component, and therefore they don't have a problem paying up for it. And then you have see the two founders post their founders special Sunday discussion note and the Sunday reading pod. Over the weekend, in reaction to Donald Trump's reaction to the Supreme Court ruling, UBS put out a piece. We titled it "Sees Gold Rallying Towards 6,200 on Tariff Troubles." So basically, they upgraded their targets, and they see the combination of tariff uncertainty with a need for the Fed to ease as being even more supportive for gold. And remember, UBS has been very conservative. So assuming that they're still conservative, this is low. Assuming that they're getting a little bit more aggressive, well, I think they're a little bit tired of being behind the curve with other banks. They don't usually stay at a higher price target than Goldman for long. So be aware of that. In the chat, we were discussing a lot of things over the weekend. Miners have come up a lot more recently. Silver is a similar formation, although at a lower area, which, by the way, I know that everybody who follows our work here knows that I'm bullish neutral as opposed to being neutral bullish, which I was a week ago. And I'm getting a little more bullish as we rally. I'm taking my position and I'm just kind of skewing it a little bit more bullish. And the reason I'm doing that is because if we get into this area here between 89 and 90, there's a good chance we could skate again up to, I can't believe it, 110. But what I feel, my opinion doesn't matter. This is what the chart says. If we get above 89.90, we could skate to 94, and then above 94, there might not be anything in the way of us going higher. I want, those of you who are familiar, I want to call this a measured move. It's not, because you have all this here above you. But the thing is, we didn't really work coming down. We just collapsed. So there's really not going to be a lot of selling in here. There really isn't. There's going to be buying. See this long candle in here? There's going to be buying. There's probably not going to be selling. All that selling got out in here and then got out in here. It really would be something to behold if we got above 90 and then got above 94. But wow, very good, very encouraging. I'm just giving you the numbers. My position keeps getting more and more bullish as we go higher. which means I'm watching when the market gets to 90, if it gets to 90, how it acts, and then I'll either go all in, parlay, or take profits. It depends.
The narrative surrounding silver has shifted from a speculative commodity to a strategic national asset. The United States is actively exploring price floor mechanisms for critical minerals, including silver, to revitalize domestic industry and insulate supply chains from foreign volatility. This policy shift, combined with President Trump's recent implementation of a 15% global tariff, a strategic move following the Supreme Court's challenge to previous tariff structures, is fundamentally bullish for hard assets. As the U.S. exports cost pressures to overseas competitors, the internal demand for silver is being met with a shrinking available supply, creating a perfect storm for a vertical price move. Institutional giants like Goldman Sachs and UBS have noted that while central banks are raising the floor on gold, American retail and fund investors are raising the roof by buying every dip. Share your thoughts on this analysis in the comment section below. If you find this video informative, please support us by liking this video and subscribing to our channel for more financial insights. Don't forget to hit the notification bell so you never miss an update. Thanks for watching.